Hello, everyone. Hope you're all having a good afternoon, and I hope to make it slightly more informative and better. Okay, I'm going to share my screen, and yes, perfect. Can everyone see my screen? Zaina, can you see the screen?
Yes, sir.
Okay, perfect.
Good to go.
So I'll quickly introduce myself to everyone. My name is Rajendra Kumar. I'm the founder of Lendly. I was based in Australia before, and I founded another company which is in a similar space called Open Loans. And the reason for me to start Lendly was when I got back to India, being a mortgage broker in Australia, I looked at one of my father's loans that he has been having for the last 15 years, and he was at a ridiculous interest rate of some 13-14% on a mortgage loan. And then I just renegotiated and refinanced that loan to an 8.5% interest rate, which itself, like right away, saved him 80,000 rupees per annum in interest costs because it was just an 18 lakhs remaining leftover money. So that is when I went and asked a few of my other relatives, and they never tend to look at their loan once they get it, which is completely opposite to what you would do overseas. So then I said, let me do something about it, and then researched on the industry and got started in this industry. I'll quickly show you something that the previous company I founded in Australia is called Open Loans. And here, the reason I'm showing you this is because there's a huge tech aspect that we have overseas, which is all the banks connect all of the information, versus in India, we do not have that kind of transparency. So whatever bank buzzer, all these websites that you might be seeing that might claim to do an automated tech play, in the back end, it is all still manual. So that's what is the difference between the industry. I'll cover a bit more of it later. But coming back to our presentation, so that's a bit about me. And today, what I'm going to explain about and the takeaways that you're going to get from it are hopefully by the end of this session, you'll be able to make informed decisions and not pressure-driven ones. Because what ends up happening is when we need a loan, most likely we're going to get or take a loan immediately. And everyone, we see this with our clients, we don't plan until the last minute, or sometimes it's just life happens and we get to the point where we need it immediately. So we take the easiest option or the fastest option and not necessarily do our own due diligence. But also it is not very easy to do that because it's very difficult to spot all the hidden costs. There's too many, like insurance, there's too many terms and conditions, there's too many clauses that we have in each of these loan documents, and every loan document is different from the other. So I will help you identify those gaps or the things that you need to note in each of the home loans, maybe personal loans and car loans, the things that you need to look for before you get a loan. Or even better, how do you assess yourself or how do you position yourself financially to be in a place to borrow better? Maybe with cheaper interest rates, lower tenures, or better accessibility to credit. And then the other thing is we'll talk a bit about the current interest rates and what the EMIs look like and the different ways eligibility is calculated in different banks and for different types of loan products. And sometimes you might already, a couple of people might already have existing loans, and then you must have gotten rejected or um, you could have gotten a better interest rate somewhere else that you might have found out later, but just because you just happened to take it then, you might not have found that as an easy option to do. And then once, assuming you get all the information accurately from the banks that you talk to or the agents that you talk to, then comparing two, three different loans is not easy. It is not all apples for apples because in a loan, there might be a certain interest rate that might be slightly cheaper, but then there'll be other documentation charges, or there'll be a processing fee or something else. So we're going to talk about what are the specific things you need to look at. But more than that, what we're also going to cover is structurally what kind of a loan you should take based on what you want to do. Is it always better to take a home loan or a personal loan or a car loan? Or should you take a personal loan to pay for your car? Or should you take a plot plus construction loan when you're buying a plot or a piece of land or investing into it? Or is it better off to take a personal loan and pay for it? So we're going to cover all the various differences within different products and when and how you should choose one over the other. We'll also talk about the nuances between uh, individual or personalized financial or loan advice, because someone earning 25,000, a product might be which is suited for them might not be the same product or the loan that is suited for someone that is earning 80,000 or maybe even 1.5 lakh. And then again, depending on the role you're in. So if you're in a sales role where your base salary is lower, but your bonuses and commissions are much higher, banks treat it very differently. So you need to plan how you will position yourself and what kind of loan is better for you given your uh, profession and your income structure. And if you have rental income, if you have other sorts of income, what are all the various things? Like by the end of this session, you'll get an overview on, okay, these are the types of loans, and this is how banks look at me. And this is how I need to identify which loan product is good for me for which use case. I'm not saying you'll become experts in this because at the end of the day, we do this on a day-to-day basis and we will be able to provide better advice specific to all the changing needs. So all of these conditions and clauses that are in each of these banks will vary from sometimes even weeks. Every week there'll be a new thing that comes up, a new offer or a new consideration or something else. So yeah, and then knowing all of this, you will be in control, you will be aware, you will not get cheated by anyone, including the bank manager, including an agent, or anyone that you might talk to in the future. Or if you currently have existing home loans or personal loans or car loans, you will also get an idea of how to manage them, how to periodically review them, and what you can do on your own and what people like us can help you with. So that is what we're going to cover in this session today. And I'm going to move to the next thing, which is, yes. So regardless of what loan it is that you're going to take, home loan, personal loan, or car loan, it's important to note that you don't necessarily need to get the fastest or the easiest option if you're preferred. That that doesn't mean it takes a long time to get you a loan. It's just that it's always a good financial decision to compare everything in the market and take the loan that has the best terms and conditions for your unique financial situation. And this is what we do at Lendly. We compare 35 plus banks and pick the best fit for you and your unique financial situation. And we also pride ourselves because we have global standards. We do not spam you. We do not force insurance policies. If you would have already taken some loans or spoken to agents or even bank managers, they request you to do an insurance because we did a favor, as if it's not their job to do this for you. And then they would ask you for getting another loan. So none of that stuff. No, no, no sales process. What we would ideally want in India in the next 10 years. So we're committed to this for the next 10 years because that is where we see a next generation uh, of more financially aware consumers coming in, where all of these things that are being done by the banks right now will eventually get streamlined. So moving to the next thing. Before we go, this is an industry overview I wanted to give you before we move on to the interesting subject matter stuff so that you get a big picture of what it is that you're going to operate within whenever you want to take a loan. So Here it talks about home loans specifically because our specialization started off with home loans, and that is what we do even now majorly. And home loans are one of the most difficult loans to do compared to maybe a personal loan or a car loan or a bike loan, because the number of things that can go wrong in a personal loan, let's say hypothetically speaking, if there's 50, the next most complicated loan or a personal loan or car loan, maybe the number of things that can go wrong will be five. So that's how complex home loans are. And this is also because of how our registration process is set up, valuation process is set up, the legal structures of various properties and documentation, all of that stuff. So I will also cover a bit about the differences between India and overseas, so that you get an understanding. Once we cover the India part, I'll tell you what's different overseas or why it is different overseas. So usually we hear when someone wants a loan, you usually tend to go to a bank or a bank website, or if you know a bank manager or your friend works in a bank, you're going to ask them for a reference and they're going to say, hey, this is what I need. This is what I'm thinking of. How much loan can I get? What is the interest rate I can get? Sometimes you get information which is accurate, sometimes not so much, which you'll only realize after you get the sanction letter. You will see the interest rate promised to you is very different from the interest rate that was verbally communicated to you. And sometimes you might not even know this, but the agent or representative of the bank that you're talking to might not even necessarily be an employee of the bank. They're independent third parties that operate as loan agents, similar to us in terms of what they're called, but very different because we pride in saying that we are independent. So we work for you and not the banks. So our job is to find you the best fit, regardless of what bank it is. So if you go to the bank only shows you their own loans. They can only offer the limited products that they have. Their credit policies are very rigid. I want only software employees, or I want only employees above 28 years old and below 50 years because I'm only willing to fund them until they're 60. So that gives them 10 years repayment. And there will be, I only want to fund certain types of properties in certain types of locations, and this is what my cheapest interest rate is going to be based on their CIBIL score or their existing uh, accounts with us or whatever. But they will not themselves know what their competitor is doing in the market because no one has the kind of time to keep updated. It's just they're competing with each other, and even if they do know, they're not going to tell you that you might be getting a better deal elsewhere. And that could mean, like, if you're considering home loans or personal loans, and if you're considering the kind of volume, especially if you're taking home loans and it's about 1 crore, 2 crore, 3 crores, even a 0.5% difference in interest rate is just going to be massive over the next 20, 30 years. It'll at least be half of the initial borrowed amount. So on a 1 crore loan, it could be as high as 40 to 50 lakhs over a period of 30 years, just a 0.5% difference. So coming to the next thing, interest rate isn't the full cost. We usually end up asking when we talk to anyone, what's the interest rate you're going to give me? But no one asks what's the processing fee, what's the legal fee, what's the valuation fee, what are the additional costs that I have? Is insurance mandatory? If so, what is the insurance? And for that insurance amount, what is the cover I'm getting? Can I? And a lot of people don't even know that insurance isn't mandatory. And we end up telling a lot of our clients that insurance isn't mandatory. So you can fight back and tell the manager or tell the loan processing officer that you do not want an insurance, or you have an existing insurance that can be mapped onto your loan per se. But usually what ends up happening is the customer gets convinced because the person getting the final step of your loan in the bank is going to beg you, plead you, and sometimes even threaten you, saying that you're not going to get your loan, you're going to lose your house if you don't do it today because it will take another 3 days for us to get that approval. All of which is not necessarily true, but that is how the industry is right now. And then the other point is eligibility differs by bank. So same income can get very different loan amounts from different banks. because of how their credit policy is designed. And these banks do not disclose their credit policy even to us, not fully at least. They give us partial bits of information, and we end up over time, over the years of being in this industry, figuring out what kind of banks accept what kind of documents, what kind of income profiles, and even within that. So, for example, if you talk about, let's say, one specific home loan, it's the same employee, same salary, same EMIs, everything is the same. And if I only differ the kind of processing center where your final step of approval is done for a home loan, if there are two different locations in the same city, if I lodge the file in one processing center, your loan might get rejected. If I lodge it in the other one, that exact same document, exact same file might get accepted. So the nuance in where to go, what to do, which processing officer, which credit officer is going to assess what kind of files in a certain way, which uh, legal counsel is going to look at this in a certain light versus in another, versus valuation. How is each bank going to treat the valuation of a property or the type of property or based on the location or the total loan amount? So that is where the expertise comes in, which a bank doesn't offer it to you. They just tell you that this is possible, this is not possible, this is what we can do for you. And sometimes even in the kind of pressure that these guys are under, their job is to log files in. So sometimes they know that your file is going to have issues and they will just log it in so that you're locked in, your CIBIL is pulled, you have a hard inquiry, and they will drag this process on for a while until finally it gets rejected, or you get fed up and you decide to go somewhere else. It's just based on what the industry is like, the kind of pressures and stresses there, and but whatever it is, as a customer, it's our job to be um, informed that things like this can happen, so that when they are happening, you can identify it or prevent it in the first place. And then one wrong choice costs you lakhs, because when we're talking specifically about home loans or any loan that is like a larger amount, usually home loans tend to be the largest borrowing that anyone's going to do in their life, unless you're in business or maybe you have other kinds of loans. So, as I said before, it's like small interest rate differences is going to be a huge number at the end of it, and we usually not like don't end up checking it quite often or moving banks and stuff like that, because of how painful the process is if you have to do it yourself, and also because of the kind of responses you get from banks and the kind of delays they do if you want to move from one bank to another, or if you want to close your loan, or if you want to get your no objection certificate, any of these sorts of things. And many agents, so if you have gone to agents before and you think this doesn't apply to me, I've been using agents for a long time and they take good care of me, many agents push one bank or two or three banks, because it's impossible for people to be aware of everything happening everywhere all at once, and they don't tend to it. So you specialize in one or two banks, no matter what kind of customer comes, it's just easy for you to see where they fit in how do you make them fit into the same um, I guess the profile that they're going to push through in that bank. So no one has the kind of time, intention, training, even if they have the intention and the motivation, no one has the kind of training that we have overseas to be able to assess and triage that loan file to a specific bank, which is exactly why independent loan advice matters. And that's what we do at Lendly. Before more in depth cover what we do differently, I also want to tell you what happens overseas and how it is different from India. Before we go there, I have a poll question. Zaina, if you can bring out the first poll that I would like everyone to answer, um, so that I can cover specific things that are, yes. So the question or the poll is, what loans do you currently have or looking to take very soon? So that this helps me identify what is more valuable to people that are attending this session, and I can cover more of that and a bit less of the other stuff. I'll just wait for a few seconds. Yeah, there's a huge majority already. I can see that a lot of people are interested in home loans or plot loans or loan against property. And I'll cover the differences between those names too, even though all of them come under property loans. It's the products are very different from each other, and when you need to borrow one versus the other, or you could do vice versa and still end up saving a lot of money on those products as well. Yep. So I'm going to cover a few of those additional points related to uh, home loans, plot loans, or loan against property or a mortgage loan as well. I see someone has raised their hand. I don't know if it's a question or there's also a Q&A section, um, all of you. So if there's any specific questions, I have a few of my colleagues in the webinar as well. So if you have any specific questions, you can ask them there and they will help you. And I can also help you at the end of the discussion where we have time to interact, and any questions that come up, I'll answer them too. Perfect. I think like we've gotten majority of the people to answer or respond to the poll. And oh, yeah, I'm going to share the results. Here I see that 65% of the people that answered are interested in home loan, plot loan, and loan against property, followed by personal loan, car loan. So that's the priority I'm going to give to each of those specific topics. Okay, so now coming to overseas, now that you know what happens in India overseas, we also have mortgage broking, which is the name of the industry that it's called overseas, which is what the same loan agent or loan agency or loan consultants, it's the same name, but it's called in a different way overseas. And the reason for all of that's happening in India is one major thing. And before I talk about that, let's do the second poll, which is also an interesting one, if you have idea about it. Yeah. Let's see how many people know what's the Fazina. If you can do the second poll, Rankit.
Sure.
Okay, perfect. So IRDAI issues certification to insurance distributors in India. AMFI gives certification to mutual fund distributors in India, and we have other regulatory bodies. And similarly, does anyone know which body certifies loan agents or agencies or distributors in India? I'm sure all of you would have gotten, no, personal insurances or through workplace insurance, and then maybe invested in stock market or mutual funds. Sometimes you could have gone through apps like Zerodha or Grow, or sometimes you could have even had an advisor. And someone, if anyone has a portfolio big enough to go into a PMS, which is basically about 50 lakhs, you would have also spoken to some advisors on where to invest or how to move your money and what to do in the current scenario and market. Yeah. So we have the options. We have a Reserve Bank of India, SEBI, which is Stock Exchange Board of India. And then we have State Bank of India, which is the largest public sector bank in India, state owned, government owned. And we have AMFI, which is a mutual fund regulatory authority. So I think we'll end the poll and we'll see the major results. And I can see that most of you have selected Reserve Bank of India, followed by SEBI and State Bank of India. But yeah, the interesting fact is that there is no regulatory body for loan agencies and loan distributors in India. It is not a regulated industry. It is not a recognized industry. So there is no, so it is not even considered an industry to be recognized. So there's no regulation to regulate an industry that isn't recognized. And that is why we have all these problems in India in terms of what the loan agents do, how they can get away with whatever they do. And it's just like as simple as they do something and you want to question them, they do not answer their calls. It's the same with an external agent, it's the same with the bank employee. And no matter how many times you complain, how many times you ask, sometimes, like a couple of our clients, we have advised them to write to RBI ombudsman because they just wouldn't respond, the banks, because they're leaving or they have an issue. So overseas, this is a recognized industry. We have to study for it. There's a certification process, and we have to do a 2-year apprenticeship to even start talking about loans. Whereas in India, doesn't matter if you graduated your grade 10 or if you even have education or a degree, anyone can do a loan. It's just you do not need to know anything, and you can sell any product within loans. It is very surprising to see that mutual funds are regulated, insurance is regulated, investment advice is regulated, but the one of the biggest cost people have in their lives is the loans that they take and the EMIs they pay and the interest costs, and it is not a regulated industry. The banks and the NBFCs are regulated by RBI, but the distribution process of the loans is not regulated. Hopefully, in the coming years, we already see some chatter around the problems that are being faced and the government trying to regulate it. So hopefully, in the coming years, if they bring in the regulation, it will be good for everyone. So the number of people that are getting um, conned will reduce in India. Okay. So after this slide of what Lendly does differently, we'll go into the juicy subject of home loans, personal loans, and car loans, and specific things within that. So what we do differently is we provide independent advice and we have a transparent fee and it is without any commission bias. Because it is an unregulated industry, when we argue or when we put in things that request for interest rate subvention or a processing fee waiver, or we ask for favorable terms and conditions, the banks end up not paying us or blocking us, which is why no agent or no independent third party, or even the staff members of the bank that you're going, if they give you a better deal uh, unnecessarily or when it is not needed, and they're also encouraged to not give you any benefits than what is advertised as the card rate. If they do that, they get their full commission or they get their full incentive, or it adds up directly into their um, monthly target. If they do not, and if they do a favor to the client because maybe they didn't want to lose the client or whatever, it reduces, and for third parties, they do not pay that commission structure. And that's one of the reason why even if there's anyone that wants to do it the same way as we are doing it, even funded companies. So there's a couple of these companies in India right now in this space that are fully funded, raised recently $7.5 million, $20 million. And if you've seen 1 year from when they start out in this industry, they're either pivoting, changing their business model to become a real estate agency or a property sales agency that also does loans rather than doing just the independent loan advisory, because there is nothing called as independent. Everyone is, so even though they raise venture capital and they give you cashbacks for going with them, so you come take a loan with us, we'll give you a cashback of 5,000, 10,000, 15,000. There's even companies giving 25,000. But what ends up happening is they do not take as good care of you as they need to. They will just send you to they will link you up with the bank. So the bank manager will call you or someone specific from that bank, and then that's it, that they do the process. And once the loan is done, it's done. So they don't care about what happens after. And if you have any other issues or what's the need, you directly deal with the bank, which is not the case with us. We are independent and conflict free. We are not tied to any bank. Our advice is based on your profile and not commissions. And we are doing this in such a way because we believe this is the positive way to move forward. And the people are craving for transparency, clarity, and some kind of accountability that currently is not there in the banking sector in India. And then we actively negotiate interest rates for you. On top of comparing the interest rates and getting you the deal and negotiating on terms and conditions, if there's an issue in the property, if there's an issue in the valuation bit. So as a customer, if you apply yourself, you just get an end result, yes or no, or you know, this is possible, not possible, or we need to take permission, we need to apply for it, it's taking too long. You have no clarity around, is it true, is it not true, why is it taking so long, is it beneficial for me at the end? So we do all of that for you. We negotiate it. I'll show you a couple of case studies that are also available on our website as to what we do and how we do that. And we also take end-to-end ownership from the first call that you do with us and the documents that you give us. And once you share your needs and aspirations, we will give you the right set of advice and ask for certain documents so that we can provide you that advice by checking with the banks that we think are best suited for you for that specific use case. So you deal with one advisor and we handle every bank follow-up and delay. So regardless of which bank it is our job to figure out which bank, which product, and at what interest rate and what terms and conditions will be the right fit for your financial situation and your need. Sometimes you already people who have home loans or who have taken, as a lot of people said they had home loans or looking to take one, you would have maybe gone to two banks, three banks, maybe four banks, and if you're super proactive, eight banks, nine banks. But a lot of the time, the information you get will not be accurate and will change once you go to sanction. And you don't know that, and they don't inform you that. And once you get to that stage and you see that this you did not get what was promised, it's already too late. Now that your CIBIL has a hard inquiry, and if you end up not taking it and going to another bank, that bank system is going to flag you saying you've recently applied and there's a hard inquiry and it got sanctioned. So why didn't you go? So it goes for secondary scrutiny within the other bank that you go to. And you will also end up getting a higher interest rate because of an inquiry, your CIBIL score will reduce. And because of that, you will get a higher interest rate in another bank if you do it one after the other. So instead of doing all of that, the advice we offer is based on our experience and expertise and what's happening in the industry on a day-to-day basis. Because we do so many files and so many clients every single day, we are up to date with the credit policies and the interest rate aspects of all banks, majority of the banks on a day-to-day, the real practical numbers, not what's said, not what's advised. And the other reason we are better than the banks themselves are we end up reading the master circulars or the actual documents that are in the banks that are even 1,500 pages long. So a master circular of maybe, let's say, HDFC or SBI is 1,500 pages long. That is just talking about all the conditions, clauses, issues within how to process a home loan. Do you think people in banking industry with the kind of pressures they have will read through any of that? Or they don't even have time to do training. So no one gets trained. So a home loan agent that you might be working with, even if you think he's from the bank, he's been there, it could be someone that's so new that last month they are working in Shopper Stop as a cashier, and this month, because of staff issues, they could have gotten him as a home loan agent. There is no training. They're just thrown in the deep end to fend for themselves, figure out, and unless you meet your targets, you will lose your job. So what do you think people will do then? Do they think about ethics, morals, and integrity? Not at that stage when your livelihood and your family's livelihood is dependent on you doing this. So in this process, customers end up getting um, frustrated and also sometimes, you know, deep financial losses over the years without realizing it. Okay, now we come to home loans. Within home loans, there's various type of home loans, and I want you to first know the difference between a home loan and a mortgage loan. Mortgage loan is also called as a loan against property. And when you take a home loan, you can only use that loan to build a house or to buy a flat or a house or an apartment. Doesn't matter if it is under construction or if it is a resale property. A home loan is primarily used for that, followed by a mortgage loan or a loan against property. It will be at a slightly higher interest rate, but there is no end use case restriction. You can use it for investment, marriage, uh, whatever else you need. So the end use case does not matter. You get a higher funding, but in both cases, you mortgage the property to the bank. And this is a physical process where you register the documents or you mortgage the documents with the bank. You go to the register office, you do something called as an MODT, and a couple of these are in our website of what the documentation looks like if you buy an existing property versus a resale property versus an under construction property from a builder directly. We'll talk a bit more about that when we see the case studies. Okay. Just these are a couple of ways that we help you. Doesn't matter if it's a new home loan, resale, apartment. We also do commercial loans. So even if you want to build a commercial building, buy a commercial property, or you have existing rental yielding commercial properties, you can also take a loan from that. And that could be a very lucrative way to take a loan. And it might be used in a different way. So it's all based on various interest rates, the kind of funding you're looking for, the kind of tenure you're looking for, and what's the end use of it. That is what we look at first. Then we look at your eligibility, your incomes, and how to do that. And we also specialize in salaried, self-employed, business owners, NRIs, complex income profiles where there's multiple sources of income coming in, rental income, maybe agricultural income. Then you have bonuses, you have uh, salaried accounts, and then you're in sales versus you're in tech. There's all these variations that we consider and we can help you with before choosing a bank. And the most important part here is when should you talk to an independent loan advisor? Is it when you need a loan or what is it? So these are all the different times that you need to talk to independent loan advisor. So before you choose a bank, if you get to that stage, but even before finalizing a property to know how much you can borrow. You want to buy a house, you want to buy a property. First, you need to know what is the amount that you can borrow comfortably with your existing financial situation, or if you're changing a job, or if you are looking for uh, a promotion, you know you're going to get a promotion, or if you're looking to see where you get a better eligibility, all of this can be done beforehand by us so that you can make informed decisions as to I can borrow 1.2 crores based on my eligibility. So this is the amount of this is the kind of price range I should look at for properties. And if you come to us saying, I want to become a property investor, this is my income, there's different strategies we can advise on how to use your existing assets or your existing income to do down payments or to do debt recycling or debt syndication. If you have multiple existing loans, we can also suggest how to consolidate all of them into one loan so that your interest rate is cheaper, you can manage it easier, but also enables further borrowing based on what is it that you want to do. And you should also talk to us when you want to check for better rates when income or credit score improves. So when you took a loan, your credit score could have been 680 or 720 or 770. But over the years, after a couple of years of repayments, it could have gone above 800. If you don't check it, if you do not look at it, you will still be paying the interest rate that you got when the interest rate spread. So how the interest rates are calculated based on your CIBIL is based on the risk assessment. From a bank's perspective, if your CIBIL score is lower, you're highly risky versus if you're higher, you're less risky. So your interest rate is also better when you're higher on the CIBIL score versus lower. I'm sure all of you know this. So as and when you keep your salary keeps improving or your repayments keep improving, you can request for a reassessment of your existing bank. Sometimes you might need to pay a small fee for it, and you could be getting a way better interest rate. And we will do that analysis for you every 2 years and say, are you better off requesting for a rate change in existing bank? Or if the interest rate difference is too high, we can even change you or move you over to a different bank only after considering the cost of the move. So when it comes to property-based loans or secured loans, because you have a physical hard asset, you will also need to consider again deregistering the property with one bank and doing it with another bank, and then any charges that incur in terms of improved valuation or improved legal if you do want to borrow more. So these are all the things that we need to take into consideration. And that is when we'll tell you it is better for you to move to this bank at this interest rate because this is how much you'll be saving after the switch costs. So that is the kind of analysis we'll be able to provide you, constantly looking at your loans every time there's a major change. When planning for loans or investments or renovations or upgrades, that is when you should talk to us too, because we are going to tell you if you should do it as a additional top-up loan or do you take it as a renovation loan. And sorry, yes, sorry about that. Yeah, if your loan amount is above 1.5 crores, you should definitely talk to us because that is where even a 0.2, 0.5% interest rate makes a huge difference. If you want the lowest long-term cost, not just the headline rate, you should also consider the current interest rate you're getting is a floating rate. So it doesn't mean it will stay the same. If RBI increases it or decreases it, it keeps increasing or decreasing. But the rate at which it increases or decreases based on RBI is different in different banks. So unless you're vigilant about it, so it could be as simple as RBI has cut the interest rates by 0.5%, but your bank might have only passed that on to you after 6 months if you do not check and request for a rate change, which basically means for the next 6 months, you have paid 0.5% additional on whatever the loan amount is. Imagine the loan amount to be 50 lakhs. What if it's 1 crore? What if it's 2 crores? What if it's 3 crores? So 0.5% could mean it's 50,000 for every crore. So if it's a 3 crore loan, it could be 1.5 lakh of additional interest you would have paid that year, or half of that 75,000 for the 6 months that you paid additional. And usually public sector banks and private sector banks are better or faster at passing on this interest rate than NBFCs. But a lot of people might also end up going to NBFCs either because they think it's easier, faster, or they got a better deal, or sometimes it's because of the type of properties that you deal with. It could be a single document property, which no other private or public sector bank funds except NBFCs. But there are strategies on if you are existing uh, customer of an NBFC with a mortgage loan or a plot loan or any of these loans, there is a way for you to get transferred to a private sector bank or a public sector bank, provided you meet certain conditions. That could mean like 2-3% difference in interest rate. So recently, this March, when we were doing the reviews of one of our clients, he was having a 12.5% interest rate on a mortgage loan at an NBFC. We reviewed the documents, we got better. options, and then we moved him over to a bank that has given the same amount of funding. So 1.2 crores outstanding loan at 12.5% was what he was paying, and we have moved it back to 8.5%. So the 4% in interest rate difference in that year alone. So even if you consider 1% as the moving cost, still 3% of 1.2 crores is about 3.5 lakhs or close to 3.5 lakhs in the interest savings that he's going to get in the year following that. This is not talking about after all the years after that. It's just 1 year after that. That is the kind of interest rate savings that this client is going to get. Okay, perfect. Um, so this is a simplified version of a flowchart and estimated timelines that we wanted to give as an indication so that people who are in the process of getting a home loan will be better off knowing what it should look like in terms of timelines, because what ends up happening is the bank agent or the independent loan agent is going to tell you it's taking this long, it's taking that long, it is because of this issue, that issue. And sometimes it's true, it does happen, but there has to be an estimated timeline and there has to be a end point. So the stronger you are in the subject matter expertise of various bank, the better you are at controlling and minimizing all the risks by addressing them beforehand. So that's what we do at Lendly. And usually for us, we say it's 10 working days, 5 to 10 working days post receiving all the documents from you is the kind of timeline that we look at. So if you look at this home loan journey, first you do the consultation with us, you do verification, which we verify the documents, and then we collect the physical documents if they're needed. That is when we compare with 35 plus banks and NBFCs based on your property documents, your income statements, and all of this. And that is when it would go to. So ideally, this step of comparing 35 plus banks and NBFCs is not done by most people. And even us, we don't claim to do all banks because there's like over 100 financial institutions in there. um, so yeah, this I've covered a lot of the home loans as a major thing because that is where most people were interested. And then coming to active loan management, this is the part that is most important. If someone has existing loans, especially home loans that are longer tenure, you need to periodically review your loans every 2 years, no matter what. And especially if you have interest rates between uh, if you have interest rates between that increase or decrease, or your income increases or decreases before that, that is when you should review it too. And we actively negotiate this on your behalf with a current bank, unlock additional capital when needed, combine multiple loans, as I previously mentioned. Don't take a loan and forget about it. That's the one thing. If there's one thing I want you guys to take out of this entire webinar or session, do not take a loan and forget about it. That's the only thing I want you to take out. This is just an indication as to the interest rates and the processing fees and the home loan checklist that you get. So this kind of organized information is not available in most places, especially across banks. Every bank will have their own individual thing, and every time they keep asking you for a new document. If you've dealt with banks already, you will know. And this is good for people. This interest rate table is good for people who have existing home loans. So just look at your CIBIL score here and go to the right, and if you see the cheapest interest rate that's available here, here in this top line is 7.1%, or here it's 7 point maybe 15%. If you're not on that, you could be on that. So that is where we can help you as well. If you have existing loans, if you can get in touch with us, that is when we would be able to advise you on where to go, how to get your interest rate down, and what is the cost of doing that. Coming to personal loans, it's the same. I'm going to give you a similar table to look at, which will give you an understanding of personal loans as well, interest rates. So this is all current information. And the things that you need to look at for a personal loan are your processing fee as well. That matters on top of this. And you will see that the metrics have changed here. So the higher the loan amount you take, the cheaper the interest rate you're going to get. And CIBIL score is not as much of a problem. So there is a bottom range where they do not do something for you, and then there is a higher range, which is what they do. So all of this information will be on our website, guys, so you can have a look at it whenever you need, and we can get in touch as well, based on what you need. And the reason, this is one thing I want to explain. This is where you will know if you should do a personal loan or if you should go for a plot loan. And just before I tell you about personal loans, if most of you have looked at if most of you have looked at plot loans, the plot loans have gone. Um, there is nothing called as a plot loan. It's always a plot plus construction loan, which a lot of people don't tell you. And there is a clause in there saying within 2 years or within 1 year, you have to build a property. And if you don't, that is when it increases. And within personal loans, there's a specialized product, same with home loans, called OD home loans, overdraft facility. So you can keep borrowing and repaying back without having to pay interest and without having to go for a new loan. And these are all the different unique products that we have access to in India, but not a lot of people know about it or end up talking about it because it is difficult to explain and then execute the loan. So everyone tends to just do the easier option. But given your financial situation, what you want to do, sometimes it could be really, really useful to do something like this. And in car loans and personal, so the reason I go to car loans and personal loans is the personal loan is interlinked with a car loan and a plot loan. So sometimes you're better off getting a car loan, and sometimes you're get better off getting a plot loan. But sometimes it might make sense purely just if your interest rate and if your EMI and if your cash flows make sense, it is better to get a personal loan, because it's shorter tenure and it's fixed interest rate. So that is, I think I'm having trouble with my thing, guys. So in car loans, one thing I want to cover is the cheapest interest rate you can get on a car loan right now is 7.1%, which is called a diminishing EMI loan, only available with one specific bank, and there are conditions and clauses for it. And that is what you need to be mindful of uh, before you get a loan, which is crazy. No one believes that there is a car loan that you can get at 7.1%, but there you have to be willing to pay a slightly higher EMI in the first year, and then a lower EMI, and then a lower EMI. So there are specialized products like this, guys, that you would get access to if you get a chance to look through the website or talk to multiple banks, which is sometimes time consuming, but that is where we come in. And that's pretty much it. Apart from, the only thing I wanted to mention is the advantages of getting a personal loan over a property or a mortgage loan or a car loan, especially if you're taking a second-hand car or if you're taking a bike loan. The interest rates tend to be higher than 10%, but you can get a personal loan at 10%, especially when you're an employee, and there's different things that banks consider as employees. So as an employee, you are the best looked at from any bank. So even more than a self-employed person that's earning 5 times your salary, you're still the best customer that bank is going to get. So these are all the options that you have, and hopefully you have gotten some overview and idea on all of these various things. If you have any questions, please put that into the Q&A, and we will get to you. And one last thing I want to show you is our website and a CIBIL score, especially before we go to the website. If you look at this, this is a sample CIBIL document. I don't know if you've ever seen. And you can see at the bottom of this all the different inquiries people have put in. This person has put in for app loans. So even if you click on an app saying check my loan, look at this, 2000, 2000. Here they're inquiring for 10 lakhs, 3000. These are all inquiries. When you actually go for a real loan, that is when this becomes an issue. And that is when banks consider this to be an issue. So be careful with app loans. Do not click on things. It's better if you get a personal loan rather than all of this. And if you go to our website, which is lendly.in, And if you go to resources, and you can see real client stories, and you can see what we have done for each client, what was the problem, how did we solve it, and that shows you the kind of expertise and depth we have. And you also have the process of documentation and agreements in Andhra Pradesh versus Telangana. What if you do a resale versus individual? What if it's a builder? What if it's a nationalized bank? What if it's a private bank? So these are all the options. And yes, that's it from my side. I'm going to stop sharing the screen and we'll see if we have any questions. Over to you, Faizin.
Okay. Thank you so much, Rajendra. So we have some questions in the Q&A section. Like you can go through it. Janav is asking we have a question of how much 0.5 percentage difference in interest rate makes huge difference overall. And is it the biggest cost?
Yes, it is. It is. Even depends on the loan amount. So, for example, if it's just a 50 lakh loan amount, it might not be as much. But if you're someone earning 25,000 or 50,000 as an employee that you've taken this, that amount could be, so for an employee earning 25,000, maybe 5-10,000 is also a big thing, savings per year, versus for the same savings for a 2 lakh earning employee might not be a big thing. So it's perspective, but the difference, the point 0.5, every minute decimal matters in finance and in loans.
Sure. And we have another question from Wangla Prasanna. Is this rate will applicable only for bank or for LIC Housing Ltd also?
So LIC Housing is a housing finance company, or you can call it an NBFC, even though it's government owned, it's not the same as banks. But they are also very competitive in interest rates, and that is, uh, yeah, you will get better rates with LIC as well. Again, it's very dependent on the property and your income and how they consider it and which location it is based in, because the way they look at a property in Hyderabad is very different from a way they look at a property in Vijayawada, metropolitan versus a tier 2, 3 city.
Okay. And Ajish too has a query like if you're making loan inquiries with multiple banks, impact my CIBIL score.
Yes, it will. So even if you by yourself go to these multiple banks and inquire, it will reflect on your CIBIL score, which is not a good thing. So the way we do it is we do something called a soft pull or a soft inquiry. And we also, any of these apps that you have that show the CIBIL score, they're also considered soft. So based off of that, we take into consideration plus or minus 15, 20 basis points as the variation when you do a hard inquiry, and we will advise you based on that. So we don't actually end up, even ourselves, we don't do that for your CIBIL. So that is the advantage you get with this. Without having to put in your CIBIL in every location, you get to know the best thing that is suited for you already.
Okay. Thank you so much. And there's another query from Krishna. Why the salaried customer is preferred than the self-employed customer?
That is because of security. It's essentially just that they know that there's a recurring income and they have stability. And because of their experience, they might be able to go to a better job and they will increase their earnings, which means they'll borrow more, which means it's all transparent, right? Like in a self-employed situation, their ITRs can be manipulated. They can show different things, which is why banks prefer an employee over a self-employed always.
Okay, thank you so much. And there's a query in the chat box by Vinesh. Like he
Okay.
has a loan with HDFC, and do you also review our existing loan and let us know if it is best to shift to another bank?
Yes, we do that. If you have existing loans, as I told you, if you can go look at the table there, or the cheapest interest rate in home loans right now is at 7.1%. If you're not on that interest rate, if you talk to us, we are going to tell you if you're going to get a better rate elsewhere and the cost of the move, and if you should do it or not. We do not care about if you're going to do your file, what is it that we're going to charge from you? None of that stuff. We are just going to provide you the absolute best advice needed, because we know in the long term that is what makes a difference. That is what makes you come back to us. So we review your existing loans, not just a home loan. If you have a couple of other loans, we review the average interest rate you're paying across all loans, and we'll show you a way as to how to decrease the loan amount or decrease the interest rate you're paying, and how to manage it easier.
Okay, and there's a question from Vishal. How can the interest rate be negotiated in car loan?
In car loans, it is specific to uh, uh, in car loans, it is very specific to which bank you choose, and if you choose a fixed interest rate versus a floating interest rate. So first you need to decide if it's fixed versus floating, and then you need to check with multiple banks. There's not very much a bank can do within the interest rate that is advertised for car loans, but across banks they can do that. So
Okay,
yeah.
so we have some more queries like Saripali has a query like for
Sorry.
home loan, the interest rate is 8.5% and there are some other deviations. So this is
So
with that.
these are all specific cases, Fizaina, and I would recommend them to go to our website or book a consultation or give us a call, and we'll be able to help them with whatever. And the review has no charges. We are going to advise you in the right way, and only when we do go ahead with that is when we're going to do it. Uh, so those specific cases, I think it's better to be discussed individually.
Okay, that's great. Thank you so much, Rajendra. So I hope we had a wonderful session today. And also adding up to it, there is upcoming session for smart travel hacks, and I would like to request the attendees to attend that as well. And thank you so much for such a wonderful session. And I guess we can call it a day. It was really, really insightful and wonderful. And wishing, so is there anything else you want to add up here, or then we can just wrap up?
Yes, and I would highly recommend you to mention Ethika if you're booking a session with us, if you're booking a consultation with us, and we would do the best we can for you, because this is the first time we are doing this. And I hope if there's any feedback, please write to us as well.
Sure, sure, Raj, will take care of it. So I guess we had good participants, and thank you so much for your time. It was really enthusiastic, and we hope the session was with the session added value to your Friday, and it made something meaningful, and you'll have a good weekend. So thank you so much for attending the session, and so we'll wrap up here. And thank you so much, everyone, once again. Bye.